Welcome to another week in review. We're going to be looking at the trading week of June 9th, 2025. Hopefully relatively quick video this week. I think it's pretty straightforward as far as setups go, and I'll try and talk about my larger view a little bit this week as well, with what happened last week in brevity, and then give some thoughts about where we could go from here. So we'll start with data. There's not much, thankfully, this week. So Monday, Tuesday, there's really nothing I'm concerned about as far as scheduled data. Obviously, we're getting a lot of volatility intraday from the administration, from Musk, from all that stuff, all those tweets coming out, etc. Obviously, they're very impactful on Thursday. But as far as scheduled releases, not much until Wednesday. 8:30 a.m. we have CPI. 1 p.m. Wednesday we have the 10-year bond auction. 2 p.m. federal budget. So not much really on Wednesday other than CPI. The bond auction at 1 p.m. intraday could create a little bit of volatility in the tape. So if you're in a position in the middle of the day, just be conscious of that. Thursday we have 8:30 a.m. we have PPI and jobless claims. And then we have the 30-year bond auction at 1 p.m. as well. So again, same thing, middle of the day. Just be conscious of the fact that, we do have that bond auction. And then Friday, we have consumer sentiment and the one-year inflation expectations, which could potentially give us a little bit of volatility. But I think the bulk of what we need to focus on as far as data-wise for the week would be CPI and PPI Wednesday, Thursday. So we're going to start with this chart here. We started with this chart last week as well. And I think it's important just to kind of illustrate where we are and where we could possibly go. The big thing I was looking at last week was whether or not we're going to be able to accept outside of this multi-week balance range that we were putting in. So the focus obviously from here is whether or not we're able to accept outside of this balance range. So we spent almost the entire month of May basically trading inside of this very defined balance range. This is also where we had acceleration take us down into the lows from the February-March breakdown that started a multi-thousand point swing down. Focus this week is whether or not we stay outside of this range the way we closed on Friday. So to get a little bit more granular on this, 30-minute chart on the S&P futures right here. So as far as levels go, that primary level that I'm looking at, which was illustrated on the last chart, was that 59.87 area, which is right here. We have last week's POC at 59.82s, and we have the bottom of the range that I'm looking at here, which is 59.74s, which is what these daily lows were on this consolidation balance day on Wednesday, as well as huge amount of concentration and action around that 70 level on Thursday, which was this crazy volatility day that we had with all the tweets coming out and flying, etc. So the big thing for me is if we have continued acceptance of this range, so this 59.87 to 75 range, I'm going to be staying on the long side, looking for last week's highs to trade, as well as printing the lower set of single prints, 6,070s from the February 23rd breakdown, and potentially as high as the B period single prints at 6,100s, again from that same day on that trend day down that broke us and started the multi-thousand point swing into the swing lows at 4,800s. I'm going to look to backfill that poor structure as long as we're staying outside of 59.87 to 75. So basically looking at that 100 plus point swing to try and backfill this poor structure right here. So if we see something on Globex Sunday or Monday with some sort of attempt to sell back down into the meat of this distribution, so again into the meat of last week's value, into this huge level at 87s down to 75s, and we have no ability to sell below this, then I'll be on the long side again looking for those rotations back up. I think as far as simplicity goes, for me, from a general market structure perspective, I have to stay looking for the long trades as long as we're staying outside of that 59.87 to 75 range here. So the weekly, the daily, the weekly, the monthly are all one-time framing up. Now with this breakout, if this breakout is confirmed and we hold this range here, then it's longs only for me, looking for 70s and looking for 6100s basically to print. If we do have acceptance above 6100s, and I don't know if this is going to be this week, I don't know if we're going to have the gas to get above this week, but if we do see acceptance above 6100s, then it's probably a straight shot to new all-time highs in my opinion. And that doesn't seem super unlikely, at least the way this market's trading right now. I would expect to see some active selling up into the 6100 range, up into these single prints. I do think it's potentially possible that we might have, a drive up here at some point this week and start to form some balance up into this range. But as far as where I'm looking, I'd like to remain long as we're basically holding this 5990 level. If we have acceptance immediately outside of last week's high of 6,025s, again, it's the same thing for me. I'm going to look to stay on the long side and basically get back up there, to keep it simple. Where that view changes, if we start offering, whether it's from a tweet, whether it's from data, it doesn't really matter why it happens, but if price can't hold this structure that we put in, if price can't hold this multi-week breakout, then this is where my opinion of this market would potentially shift. We spent almost a month consolidating inside of this trading range. If we have a look above and fail of this trading range, and we can't stay outside of that, then as far as balance rules go, I would be looking for the opposite side of the trade and backfilling again back down into the middle of this balance range, potentially the opposite extreme. A failure of multi-week balance breakout, in my opinion, would potentially be pretty bearish in the short term. So if I was looking from a structure perspective, we spend this entire time consolidating in this range, we break above it, but all of a sudden we'd have no acceptance back above it. That generally is going to target the opposite extreme, so back down into 5700s. And I think if that were the case, I would probably be looking as low as 5600s and basically backfilling all of this structure and getting into the meat of some higher time frame moving averages like the 50-day down here, and potentially even getting back into the this big pivot that we have down into the 5600 area and the anchored VWAP from the swing lows. So basically, stacked moving averages of the all-time swing high and then the swing low into this range down here. A failed breakout of multi-week balance, I think, likely comes back and backfills this range. I'm putting the cart before the horse here, obviously. I have no reason to be bearish until we actually fail. But I think in that scenario, that's just something you have to keep an open mind about. As far as the NASDAQ, it's essentially the same thing. The NASDAQ did lag on Friday. We did print an inside day. The inside day actually gives us a pretty nice reference for Monday. So inside day rules, or inside day, inside bar rules, I should say, for the sake of simplicity. If we're accepting outside of the inside day range, then I'll be looking at longs only. So if we're looking at 21,860s, I'll be looking for the long trade, obviously to target last week's high first, but more likely try and target up into this 22,040 range and potentially as high as the 22,200s range up into here relatively quickly. I think we can get, if we're accepting outside of that balance range on the S&P and we start accepting outside of the inside day range on the NASDAQ, then I think you get an acceleration move pretty fast, especially on the NASDAQ, and start squeezing some shorts out as well, and really get that move higher faster as all those people get forced out of their positions and they become forced buyers. This can go higher quite quickly if we start doing that. The big level for me on the NASDAQ is the 21,550s level. I've talked about this in previous videos as well. But basically for me, in conjunction with the S&P holding this 987 to 75 range, as long as the NASDAQ basically continues holding this 580 to 550 range, I can't really be bearish. I really can't be looking for those big short rotations. I'm going to continue looking for the long rotations. So if we do see this inside day break lower, then I'll be looking down into this range of 580s to 550s to potentially see a bid for the moves back up. That would have to coincide again with the S&P holding this 87 to 75 range. And again, big thing here is that, I'm structure-wise, what this market is dictating to me right now is I should be looking for long trades. Personally, I should be looking to see if this, if this multi-week balance break is going to hold. I should be looking to see if this 21,550s level, which has been massive on higher time frames, I should be looking to see if this is going to hold, and I should be, favoring more so looking on the long side, getting those continuation long trades until those levels ultimately fail. That's how I'm going to look at this week at least. So perspective shifts if we start getting below this range and we start failing this multi-week breakout that we put in as of Friday. that's where my perspective would shift, and that's where I think, we could have some better opportunities on the short side to fill back in this balance range and potentially break through this and backfill some of the structure lower, some of those gaps lower, and start testing those anchored VWAPs from the all-time high and from the swing lows that we put in, which we can see right here. Pink line, yellow line, 50-day moving average down into this range. So going to try and keep it fairly simple. Data's fairly light. CPI, PPI this week are the big ones, as well as don't forget those bond auctions. Middle of the day, Wednesday, Thursday, if you're in a position, just be conscious of that. Hopefully this helps. Relatively straightforward, I think, this week, at least for myself. Good luck this week. If this video helps, please like, please comment, subscribe to the channel if you haven't. It means a lot. Thanks very much.